Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about FUFENG Group interim report. FUFENG Group Limited offers a diverse range of businesses and services across various sectors. These include food additives, monosodium glutamate, starch sweeteners, glutamic acid, compound seasoning, and corn oil animal nutrition. Refined corn products, threonine, lysine high-end amino acid products colloid, xanthan and gellan gum products other products, fertilizers, synthetic ammonia, pharmaceuticals construction materials, autoclaved aerated concrete blocks research and development, new biological techniques and achievements information services, biological technique information services sales of cosmetics and biological products, logistics and heating services. The skyrocketing of FUFENG Group's stock price, a year of growth and confidence over the past year. FUFENG Group's stock price has experienced a remarkable surge, with a total shareholder return of 130% in the last 12 months. Several key events have contributed to this significant increase. The company's strong interim profit expectations and results for HON 2025 were a major catalyst, with a net profit increase of approximately 700 million yuan compared to the same period last year. FUFENG Group's commitment to shareholder returns through dividend declarations has also boosted investor confidence. Strategic investments, such as the construction of a deep corn processing plant in Kazakhstan, have signaled future growth prospects and expansion into new markets. Furthermore, the company's sensible debt management and 12% EBIT growth over the preceding year demonstrate sound financial health and operational efficiency. These positive developments have outweighed the slight dip in revenues and net profits reported in the 2024 annual report. As a result, investor confidence has been bolstered, leading to the substantial rise in FUFENG Group's stock price over the past year. The primary drivers of revenue growth or decline for the company can be summarized as follows. Revenue growth is primarily driven by the increase in demand and supply of MSG products, corn refined products, threonine, lysine, starch, high-end amino acid products, and xanthan gum. The growth in these areas is attributed to factors such as increased corn planting area, stable coal prices, and government efforts. On the other hand, revenue decline is primarily driven by weak demand for MSG in the food and beverage market, low price of MSG, and decreased sales volume of fertilizers, glutamic acid, and others. The decrease in these areas can be attributed to factors such as low price of MSG and weak demand. The company's animal nutrition segment has seen significant growth, with a 28.9% increase in revenue. Additionally, the sales volume of MSG and threonine have increased by 4.8% and 39%, respectively, contributing to the overall revenue growth. Net income and profit margins shifts in recent periods. The financial performance of a company has undergone significant changes in recent periods. While the food additives segment saw a substantial increase in net income by 34.4% to Rm 1,020.2 million, the overall net income declined by 8.1% to RMB 4,836.4 million. Profit margins have also experienced variations across different segments. The food additives segment witnessed an improvement of 4.8 percentage points to 15.8%, while the high-end amino acid segment saw a notable increase of 3.9 percentage points to 40.7%. Conversely, the colloid segment initially showed a rise of 4.8 percentage points, but later dropped by 3.2 percentage points to 36%. The animal nutrition segment, however, demonstrated a significant improvement in profit margins, with an increase of 7.8 percentage points to 28.2%. These changes indicate that the company's financial performance is not uniform across all segments, and some areas have shown notable growth while others have experienced decline. The company is indeed generating positive operating cash flow. The financial summary confirms this, stating that the company has a net cash inflow of approximately Rm 1,622.8 million from operating activities. This trend continues in both 2024 and 2025. With cash generated from operations increasing to Rm 109,536 in 2025, indicating a stable and growing positive operating cash flow. The company's debt level and interest expenses have seen significant increases. The total bank borrowings rose from Rm 11,364.5 million to Rm 13,492.5 million, while the total debts increased by Rm 12,128 million. Interest expenses also surged, with a 34% increase in just 6 months, from $102,082,000 in 2024 to $137,080,000 in 2025. There were no significant acquisitions or divestitures in the company's financial activities. This indicates a stable and conservative approach to business expansion and restructuring. The absence of major transactions suggests that the company is focusing on organic growth and internal development rather than external mergers and acquisitions. The company has a history of paying dividends. In the financial summary, it is stated that the company paid dividends in 2 forms: basic interim dividend and special interim dividend, with a total dividend payout of 36.5 cents/HKD. Additionally, the company also paid a final dividend in June 2025, amounting to HKD 551,561,000. There is limited information on share buybacks, but it is mentioned as yes on page 31, indicating that the company has indeed bought back shares at some point. Concerns about inventory buildup and supply chain disruption. The financial summary of the report highlights concerns regarding inventory buildup for monosodium glutamate, MSG. The data suggests that there are several factors contributing to this issue. Firstly, weak downstream demand and low prices have created a potential for inventory buildup. Furthermore, new production capacities for MSG have been fully deployed, indicating that the company is producing more than it can sell. This surplus has resulted in an inventory write-down of $2,106 in 2025, resulting in a loss due to excess inventory. These findings indicate that there are significant concerns about inventory buildup and potential supply chain disruption for MSG. The company's inability to match production with demand may lead to further losses and disruptions in the supply chain. That concludes the financial summary for FUFENG Group. Feel free to comment below, and I will be happy to answer them when possible.